One of the sort of unique and essential properties of Bitcoin is this concept of censorship resistance. The idea that if you are utilizing the Bitcoin protocol, no third party or central authority can stop person A from transacting with person B. This is a big change. And I think from the context of national security, it's easy to view censorship resistance as a double edged sword. So my first question is for you, Matthew Ferranti. Does Bitcoin undermine sanctions against principal U.S. adversaries? And I'm asking you this because, as many of you in the audience may know, Matthew is the author of a really sort of interesting paper that made headlines late last year, talking about central bank allocations of Bitcoin as part of his thesis at Harvard. So, Matthew.
Thanks, David. So I like to think about breaking this up between sort of sanctions evasion at a macro scale and sanctions evasion at a micro scale. So when you think like at a macro scale, talking like billions of dollars worth, sort of what it takes to actually power an economy and international trade and that kind of stuff. Um, Bitcoin's not there yet, and there's no evidence that it's being used to circumvent sanctions kind of at that level. Now, when you look at smaller amounts, to say millions, hundreds of thousands, that kind of thing, sure, people use it to evade sanctions and make transfers that banks won't otherwise process. We just had actually some examples of that in the previous panel that were, you might argue, are even good. Sometimes if an authority evasion of sanctions is it's not just U.S. sanctions, but it's also policies by authoritarian governments. Um, Another interesting thing about Bitcoin, it's not just when we think about sanctions, we often think about like sanctions that are imposed for national security related reasons, for example, related to Russia's invasion of Ukraine. But they're also just sort of plain vanilla forms of capital controls that governments use to prevent outflows of capital, sometimes to stabilize their exchange rates, things like that. Um, this can also be a form of blunting the effect of sanctions. So, one of the things that Russia did quite adeptly after the U.S. And the Europeans applied a lot of sanctions to them last year was they imposed very strict capital controls on bringing capital out of the country. So if people were using a lot of Bitcoin at that time, they wouldn't have been able to block them from transferring Bitcoin to other places. And so that might have actually, in that sense, Bitcoin can, in some respects, make our sanctions more effective by blocking a way of mitigating them.
Yeah. And let's talk about the other side of that sort of censorship resistance sword. So the other Matt, uh,
2 minutes.
yeah, uh, talk to us about the ways in which Bitcoin can help citizens of closed societies evade authoritarian controls.
Well, I think the last panel did better job of explaining that than anything I could say here. One I think angle that that I would bring to this discussion is in particular, kind of the rising, quote unquote, we might call it through the frame of multipolarity or Cold War 2.0, kind of rise of great power competition raises the stakes on a lot of these other policy domains where national security prerogatives, geopolitical prerogatives, economic policy, monetary policy, trade policy, and human rights policy all start to become intertwined. And that sort of coupling is becoming especially intense in the global south, in these emerging markets, developing markets, which are kind of leapfrogging in terms of their technology stack. They're kind of coming into the digital age very quickly. And that's creating kind of intense competition between different models of governance, different models of sort of techno-oriented sort of social structures, economic structures, and kind of policy making. And there's an intense competition going on between kind of a closed authoritarian model being really pitched by China, sort of the sort of stack they're trying to offer to a lot of authoritarian governments around the world, sort of built on their telecommunications infrastructure, Huawei, ZTE, sort of surveillance as a system, authoritarianism as a service, essentially. And they're trying to like roll in their digital yuan as essentially a part of that techno-authoritarian stack to really compete for influence and try to capture a lot of the global south kind of into their sort of geoeconomic and technological sort of sphere of influence. And this is a sort of a competition that the United States sort of isn't necessarily well positioned to compete on. Like we don't necessarily have the same sort of state-driven approach to selling in these sorts of like integrated authoritarian types of technologies. And a lot of those countries there is a sort of organic adoption happening for Bitcoin and dollar-based stablecoins. So a lot of places you see kind of these competing models of a monetary system coupled with an approach to governance that is represented on the one hand, much more open, opt-in, voluntary, organic Bitcoin dollar-based stablecoins that are sort of just being chosen by individuals in those societies, coming into contact with a lot of potentially corrupt deals being made by a lot of these authoritarian inclined countries with a Chinese sort of much more authoritarian oriented techno stack. So to the extent that Bitcoin and dollar-based stablecoins have this synergistic effect on promoting the things we talked about in the last panel, giving more autonomy to those individuals relative to the censorious and authoritarian inclinations of their governments. This has a geopolitical overlay to the extent that those governments, are potentially checked by the powers that Bitcoin and dollar-based stablecoins give to their populations relative to the powers and influence that China is trying to achieve in the global south.
All right. Uh, Kyle, I think this is a topic that you're quite passionate about. Do you want to dive a little bit deeper into the sort of role that you see Bitcoin playing with regard to US China competition?
Yeah, thanks, and thanks for having me here today, everybody. So I'll piggyback a little bit on what Matt said and go a little bit further. So I think it's evident in today's world that we're seeing this shift from a unipolar power structure to a multipolar power structure. And this was, this is something that's instigated by US adversaries, but it's also opportunistically adopted by US allies. We've seen, uh, nations like Saudi Arabia, a long-time US ally, repositioning itself. We've even seen with Macron's recent visit to China, a repositioning towards this multipolar view. And I think in terms of that, we have to also look to perhaps some historical examples. And so the nearest is the actual Cold War, when we had a bipolar system or something leaning towards multipolar. And um, the interesting thing about that time is that, the battlegrounds were not in Moscow and Washington D.C. Those were it was they were quarterbacking from there, but the battlegrounds were actually in other states. And from intelligence perspective, there's lots of books about this as well. But you know they were not trying to recruit assets in Moscow and Washington D.C. It's too hard, right? The hope is that you can recruit them in the developing world, in the global South, and hopefully they go back and maintain their access. And I think we're going to see um, similar situations play out in the future here, where now in this sort of digital assets and digital value rails race, it's going to play out in parts of the world. And I think instead of having contiguous border spheres of influence, we're going to move into a situation where you're going to have sort of digital and financial rails that link nations together. So you're going to have digital asset network spheres of influence instead of actual physical geographical spheres of influence that are contiguous. And so um, I think it's really important to point that out, that a lot of this is going to be occurring in the developing world. Um, and I think it's something that we have to pay a lot more attention to moving forward, especially since China, let's take the continent of Africa, 54 nations there. Their trade is 4 times more than the US due to decades of the Belt and Road Initiative. And so the US now is so far behind, it's going to be hard to have these sort of digital currency wars. The opportunity here for the US is to embrace the Bitcoin network, the largest, most secure payment rails around. Um, in order and one that is naturally aligned with US policy and US the foundations of the United States in terms of democracy, transparency, reliability, to embrace this network. And it doesn't necessarily mean killing the dollar. This means, adopting a network that can be used and that can promote US values in nations that are trying to be tempted and pulled by the digital yuan, which has more nefarious purposes.
And I want to quickly soon I want to turn this over to Ben, because I think your experience in Africa is going to be really helpful in thinking through the role that Bitcoin is going to play there. But Before that, Matt, I want to turn it back to you because I think the concept that you just touched on, Kyle, is really important, and I want to make sure that everyone in the audience is sort of tracking the sort of trajectory that you laid out there. So, Matt, can you briefly explain a little bit more what Kyle is talking about when he's saying that the Belt and Road Initiative is sort of perhaps facilitating the adoption of the digital yuan in Africa?
Yeah, so the structure of the kind of global monetary and trade system, is this, called like Chimerica, right? We run structural trade deficits, they run structural surpluses. That means they accumulate dollars. The traditional pattern for many decades that we sort of pulled China into was they would essentially recycle those dollar surpluses into our into our assets, specifically U.S. Treasury securities. In 2013, they kind of made a structural pivot where they decided we have enough treasury securities. We're going to sort of cease net accumulation of treasury securities in our portfolio. And we're going to sort of instead take those dollar surpluses and re-lend them around the world in a massive program of really like strategic influence and securing critical assets. So it is one of Xi Jinping's sort of primary strategic initiatives that he's been driving for the past 10 years called the Belt and Road Initiative. And that has like a financial dimension where they make large dollar loans to the developing world and emerging markets. And they make, strategic investments to spread political influence and secure claims on strategic assets, ports, rails, etc. Some of those dollar debts have gone bad, but it means that they now have a stronger bargaining position at the table at the IMF, et cetera, and these different creditor committees. Along the rails of that financial and dollar essentially weaponization has come the direct sales and infrastructure that they've really taken a leadership role in around the world with sort of next generation telecommunications capabilities, specifically a Huawei, ZTE, Hikvision, surveillance cameras. They're sort of the leaders in providing this toolkit. And the digital yuan, they don't necessarily have ambitions to internationalize the yuan as like a competing reserve currency to the US dollar right now. What they were trying to do is build sanctions resistant mechanisms, as was just mentioned, to insulate themselves from Western economic coercion, to try to build more direct relationships with their trade partners, which they have, by far the dominant relationships with around the world as the sort of the single largest trading partner. And they're trying to construct a global trade and settlement apparatus that can be really resistant to Western sanctions, as they maybe have larger ambitions in Taiwan in the next few years. So this is the principal strategic challenge the United States faces around the world, and they are aggressively positioning themselves for influence as well as setting up these technical mechanisms to sort of resist Western coercion and institute kind of their strategic objectives.
All right. So, Ben, this question is for you. To what extent can Bitcoin advance American interests in Africa? And I think it would be helpful for you to give the audience a bit of context on why you're sort of uniquely qualified to answer that question.
Thanks, David. First, I just want to comment that we are the first panel to uniformly deliver to you 4 men in suits and ties. So you're welcome for that. Since I left government last last fall, this is, I think, the first time I've worn a suit, something that I don't miss too much. But yeah, so a little bit on my background. I spent the last 15-ish years as a U.S. Foreign Service officer, posted overseas. Spent the last 5 in Africa, based out of Kinshasa, Congo, and then Nouakchott, Mauritania. And that Africa experience, in particular, really showed me kind of where we're going in terms of what we have to wrap our arms around and what strategies we need to adopt in order to meet the coming threat. And that's along the range from that's along a range from state to non-state adversaries. And as as Kyle and Matt pointed out, that is the adversary on top of that list is China. And there's no other place in the world, other more than Africa, where that is playing itself out outside of China and outside of the United States. And so, understanding what that looks like and what the peril and what the opportunities are is really essential. But let me just kind of lay out real quick, what the stakes are. So, in Africa, you have countries that represent an enormous amount of natural resources that are only becoming more important and more strategic as we need critical minerals and those supply chains secured for the advent of technology across all of the stuff that you guys understand. Uh, in a very, very difficult place. It is also the home of the future of humanity. You have the best demographics in terms of young population and moving in the right direction. The numbers are incredible when you look at where we're going to be in 2050. The shift in population is moving to the global south and Africa in particular. China knows that. We know that. I'd argue that China is ahead of us. Russia, we can make the argument, is ahead of us in Africa in terms of pushing across a coherent kind of national security strategy for their countries. So, in the case of China, they already have secured a lot of the supply chains for critical minerals. This is possibly, the most important thing for our own national security interest in terms of maintaining and advancing our defensive posture and the technology that comprises that. A lot of that comes from Africa. Um, the Atlantic seaboard of Africa is certainly is right now under contention. A Djibouti, that's the other side of Africa, base that China has secured on the Atlantic seaboard would be arguably disastrous from a U.S. national security perspective. Then you would have the ability for China to reach U.S. shores via submarine without having to surface once. We can't let that happen, but we can only do what we can. China has, as Matt pointed out, surged where in places where we have pulled back and where our partners have pulled back. France is kind of at the top of that list, and so we've got to look across what is in our arsenal of options from a diplomatic, geopolitical perspective, and what it is that we can do. And we're kind of coming up short. Um, and so that takes me to Bitcoin. I really just want to say simply ditto to the last panel, and I think that it's probably very clear what that linkage is between what's happening on a human rights front and our national security objectives. But let me just put a fine point on that. I think one way to think about that is to go back to Cold War 1.0 times and examine what was essential to that moving in the right direction. And it was ground up, organic, social movements, color revolutions, solidarity that were happening organically and that we supported. We said, yes, this is good. We're going to get behind it. We're going to let this rip because wherever there is a movement that is increasing self determination and sovereignty, that almost always is good for American national security interest. And I would argue that that Bitcoin, as a social movement, as a human rights movement, as an organically occurring movement, it fits into that same category. But we're early days because we're also early days Cold War 2.0. Sovereignty and self-determination also is going to play out in unexpected but very important ways at the national and sovereign level. And so, Africa is a collection of states that, in some cases, you have some capacity, but in a lot of cases, you do not have that capacity. And so, it is also in our interest to look at the dynamics that are helping countries become more sovereign and more self-determined. And I'd argue that Bitcoin adoption, Bitcoin mining is as a way to unlock energy and unlock energy resources that can't be extracted by another country as a huge component of that. And that's something that I think we can actually play a little bit more of a proactive role in. And I think we'll see over the next 0 to 10 years that energy being unleashed as through Bitcoin mining as kind of the pioneer species of U.S. innovation and companies that are going to these difficult places and converting wasted energy into value that can be transmitted via the internet. I'll stop talking there, but that's just some things to think about that I think about a lot.
I
Can
saw
I
you. Oh, go ahead.
I just wanted to add one thing about the organic development of this technology in Africa. When I was younger and fresh out of school, I worked for the UN Millennium Development Goals, and which later became the Sustainable Development Goals. And you see how a lot of these interventions play out. That's unsuccessful. They do another round of billions of dollars invested. But one of the goals here was to invest in, you know, electricity infrastructure, and they would, put billions into just, a small area to try to develop electricity for remote villages. But this is not organic, and it perpetuates this patronage system that even when you're, living and working. I lived and worked in Africa for over 5 years. You talk to people, they're not really thrilled with this patronage philanthropy system that just keeps people in debt all the time. And you saw on the last panel, Gladstein has talked a lot about this in his books. But to have something like Bitcoin come in and Bitcoin mining be able to lift up communities and have them be able to build electricity systems through this technology is really remarkable. And this organic growth, like Ben said, is incredibly important because it allows self-sufficiency. And that's something that we didn't see as a result of the Millennium Development Goals and the Sustainable Development Goals, despite their names. We're not seeing actual sustainability because it's not the communities that are doing it themselves.
Matthew, it seems like you wanted to hop in.
Yeah, I just wanted to add a data point, as we've said a lot of stuff about China, just to throw out like a interesting statistic. So there's a new paper that came out about a month ago by some other people. I wasn't involved in writing it, but it's called China as an International Lender of Last Resort. And the authors compile a comprehensive data set of China's lending activities all around the world that totals $250 billion, about 20% of the IMF's activities over the time period they looked at, and it's growing quickly. So just to give a sense of the scale of what China's doing here, it's not small.
And my next question, Matt, is for you, Ferranti. I want to move away from the sort of conversation about geopolitical competition and kind of conclude this panel by talking about, what is often the 5,000 pound, elephant in the room, which is this idea of like monetary competition. I think ever since the early days of Bitcoin, one of the most common critiques was that, just sort of by its extant property of being a neutral non-state money, that its rise was, zero sum with the dollar and zero sum with the West's control over the financial system. So I want to ask you sort of just pointedly, does Bitcoin undermine the US dollar as the global reserve currency?
I think there are ways to, of course, as an economist, I'm going to say it depends, right? but but there are ways in which Bitcoin is both a substitute and a complement for the US dollar. Of course, sort of the substitute argument is just, yeah, it's another thing out there you can buy, and you could get rid of your dollars and hold Bitcoin. And I guess if you're a country or a individual, or maybe you're worried about US sanctions or the stability of a banking system or something, then maybe that is something that might happen. The complement argument, though, I think is not explored as much, which is that the US dollar is also a very important aspect of the cryptocurrency ecosystem because of US dollar stablecoins. And US dollar stablecoins facilitate a great deal of trading among various cryptocurrencies, including Bitcoin, of course, as well as being a bridge between Bitcoin and the traditional financial system. And so there's really nothing that says that Bitcoin and the US dollar can't grow together because of this linkage with the stable coins. And so and also, and again, and because stable coins, of course, are many of them are pegged to the US dollar, there's room there, I think, for financial regulation and legislation, perhaps, to try to promote that sort of the stability and kind of U.S. goals in that corner of the ecosystem.
but you don't really see a possibility that, well, you're an economist, so I won't say possibility, but you don't think that it's likely that, as certain politicians have recently, claimed that, Bitcoin is going to, destabilize nations' currency systems. Like that idea seems to me ludicrous, but you're the Harvard professor, so I want to hear your take on this.
I'm a student, not a
Oh,
professor.
sorry,
Yeah.
student.
Well, so Bitcoin does. I mean, the price volatility of Bitcoin is really problematic in terms of its adoption at a macro scale, because you just can't conduct large scale business transactions when you don't know how much Bitcoin is going to be worth 1 month or 2 months or 3 months from now. And that's a big barrier, I think, to its sort of broader adoption. But in terms of holding smaller amounts of Bitcoin, let's say as like a central bank reserve, a couple percent or something, no, that's not going to destabilize the economy. I mean, the 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 event that would be much more detrimental to the U.S. dollar uh, would be defaulting on the debt, not Bitcoin.
Yeah. So, Matt, as we sort of round this panel out, I want you to sort of, if you can, maybe sort of lay out the scenario that Matthew Ferranti just hinted at, like this idea that Bitcoin can support the dollar. How exactly does that happen, and how is it happening now? How do you see it potentially happening in the future?
Certainly. Perfect. Yeah. So these things are all one. They start small, but then sometimes you can get to various tipping points, either positive tipping points or negative tipping points. I think one positive feedback loop that you could imagine in getting to a quite significant scale that Matt pointed out is the synergy between Bitcoin and dollar-based stablecoins. That if you have a proper regulatory regime that requires that stablecoin issuers reserve 1-to-1 with dollars, high quality liquid assets, just like money market funds, that as the sort of demand for dollar-based stablecoins goes up, principally driven in large part by demand for Bitcoin going up and the trading, thereof, that they have to then go out and purchase high quality liquid assets to back those dollar issuances, those dollar claims 1-to-1. So that's a net new buyer of treasury securities in the market, which, all things being equal, is good for U.S. debt service, especially as we confront a world where the net foreign buyer for U.S. Treasury securities is going to be harder and harder to find, especially among adversaries in this sort of dollar surplus recycling system. So the GCC countries and OPEC plus and China might not necessarily be all that willing to recycle the net new dollar that they get from selling goods or selling oil or selling gas back into U.S. Treasury securities. They might be diversifying into other Western assets. They might be diversifying into gold, other commodities, might be diversifying into Bitcoin. So the extent that we can sort of fill that gap a bit, it helps with stability in the treasury market. This does get quite more technical, like where along the curve does that net new demand come in? Short end of the curve in like T-bill versus longer end tenors. This sort of matters for the regulatory regime. But net, this sort of means that there is this positive sort of synergy that you can imagine being sort of organic, but also being reinforced by policy. And like over the long term, you can think about like Bitcoin right now, as Matt pointed out, is not really principal use case as a medium of exchange for like daily purchases, right? Its volatility means that it's probably not something you're going to denominate, so much of your daily purchasing decisions. So it's like dollars for the short term, Bitcoin for the long term, right? And that's especially acute when you have the dominant the dominant reserve asset right now is the Treasury security. We're putting a lot of sort of geopolitical and hegemonic weight on the U.S. Treasury security market, which is like the most strategically important market in the world. And it is that strategically critical asset because it's quote unquote safe and liquid, right? And we've seen sort of two recent events that have sort of called into question the safety and liquidity of the U.S. Treasury security market. We had COVID, which saw basically a sell-off in the Treasury market. The off-the-run sort of freely traded Treasury security market basically froze, and the Fed had to come in with like $1 trillion of QE in 3 weeks. Then we had sanctions that told a good chunk of the world that maybe is sort of geopolitically on the fence with the United States that their reserve portfolio may not be as safe as they thought. So the liquidity of the Treasury market and the safetiness of the Treasury market have taken some hits recently. The Treasury Department knows this. The bond market knows this. They're trying to put in place kind of stopgap measures, other sort of technical fixes central clearing, all-to-all trading. They recognize that we're going to have to structurally increase treasury issuance to finance defense increases as we go into Cold War 2.0, if not hot war. With China, we're going to have to finance, as we heard in the earlier panel, massive transformations of our electrical infrastructures. We're going to have, massive new sort of deficits to finance that energy transition. We're going to have to pay, increasing outlays to our retiring elders for these various entitlement obligations. And generally speaking, we're going to be in a much more contested environment. It's going to mean getting access to scarce resources is going to be contested. It's going to be more expensive. It's going to raise sort of the floor for inflation across the world. These are not good things for the bond market. These are not good things for the treasury security market. And the United States has put a lot of hegemonic sort of weight on the stability of that treasury market. So we're putting a lot of chips in that particular basket. Anything we can look around to try to reinforce that foundation, I think we should explore.
Yeah, that makes a lot of sense. And something else you've written about, at length for BPI and spoken about is the manner in which the United States is positioned to disproportionately benefit from, a market increase in Bitcoin's monetization. Can you talk about that for a minute?
Yeah, this gets a little bit more like speculative, right? But so there's been talk about de-dollarization. I think that's more like as a talk than an actual fact, but it does speak to what is like the locus of geopolitical competition and the monetary system coming under increasing strain. And you do see, the BRICS countries essentially trying to both participate in the dollar system as much as they can to, gain through trade. They're the major producers of surpluses, but they recognize like the dollar fundamentally is a vulnerability for them. So they're trying to sort of generally position themselves and insulate themselves from potential sanctions through acquisitions of gold, right? That's like the old standby when things get rough and tumble. The old central bank standby is gold. So Russia's acquired a lot of gold, China's acquired a lot of gold, Turkey's acquired a lot of gold, India has a lot of gold, Brazil has a decent amount of gold. Like this is where you go when things start to break down and the sort of the prevailing sort of global order starts to be called into question. The United States has a lot of gold, but like we would stand to sort of net lose if things went really sideways and gold became relatively more monetized than it is today. If you were to sort of substitute instead demand for gold with demand for Bitcoin, well, we hold disproportionately more Bitcoin than the rest of the world holds gold. So if to the extent that Bitcoin were to monetize, not to the extent not at the expense of the treasury security market, but at the expense of the gold market, we would stand to gain relative to our adversaries because we hold probably the majority of the Bitcoin in the world. We have the plurality of the Bitcoin hash share. So like if that was the scenario that you were trying to sort of mitigate against as like a tail risk, then Bitcoin would be a good sort of downside protection risk.
Can I speculate on something as well?
Yeah.
Um, so an interesting thought experiment that I think has some merit as we're trying to understand where the CCP is going to go. Bitcoin and the manufacturing of ASICs and the maintenance of those ASICs is disproportionately managed, run, owned by affiliates of state-owned enterprises, which is really interesting thing. Which is a really interesting thing to think about in the context of what China did 3 years ago, 2 years ago now, which was to kick out all of the miners, make it illegal to mine inside of the country, make it illegal to own Bitcoin. Um, I think everyone understands why they would not want Bitcoin and Bitcoin adoption inside of China. Capital controls probably at the top of the list, but this is a freedom technology in the context of what the CCP is trying to do from a centralized authority way of governance. So, but this is it speaks to the heart of the CCP's conundrum and the social contract that Xi Jinping has, which was, hey, we're going to allow everybody to be good capitalists. Just don't cross these lines. Go make a ton of money, and your standard of life continues to rise, and that's really important to his regime. So now we've got Bitcoin mining. You can do it outside, can't do it inside, can't hold it inside. Yet we probably have a return of 20, 21% of the hash rate coming outside of China, which we can see that because it's an open protocol. And that's a really interesting thing. What are the Chinese going to do about that? For now, they're not doing anything. We know that there are a lot of Chinese inside of China that hold Bitcoin and still transact with it. There are ASICs manufacturers and maintenance companies that are working with miners in Africa, in the United States, and Canada to deliver those goods. Those folks I know are more freedom oriented as a result of the chosen profession that they have. They're going back to China. This is a really interesting thing to think about. I'm not sure exactly where it's going. It speaks to a problem that the CCP has as they're doing their kind of communist or controlled capitalist experiment. But it's something that the foreign policy community in the United States, I think, should think more about.
All right. We've got about 3 or 4 minutes for closing remarks. So do we want to maybe go down the line in 30 to 45 seconds each? Closing thoughts?
That was my closing salvo. But
All right. Kyle?
Yeah, Kyle.
You know, I actually want to comment on something that Matthew said here. He said, I'm a student, not a professor, and I've done thousands of meetings at the state and federal level over the past 2 years with policymakers, and even sometimes with educators, and that's one of the things I hear the most. The professor doesn't quite get Bitcoin, but his students get it, right? The 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 politician I'm speaking to, who's 70, 75 years old, doesn't get it, but his staff does. Or I don't get it, but my son has a lot of it, right? This is what I hear all the time. As Ben said before, the population of Africa is the youngest in the world, of all the 54 nations, right? They have the youngest population, 30 and under. And they're embracing this technology. It's being embraced by the next generation who's not afraid of this technology. And so this is something that is not going to be stopped. It is here to stay. The best thing the United States can do for its own national security to preserve its relevancy into the future over the next century is to adopt these payment rails, to adopt this network, to support it in countries that don't have options, as we saw in the last panel. And so I think it's good that Matt's a student. He will be a professor because all the students now will be a professor. I don't want to choose your future for you here, but hopefully you'll be Secretary of the Treasury.
Moving up the ranks pretty quickly.
But I think it's really, really important to recognize that this is a generational technology, and we're lucky to have a lot of political support on both sides of the aisle, even people who we would not expect to be traditional supporters of this, but who get the technology, and certainly their staffers do, their children do. And so this is something that the U.S. needs to embrace to maintain its relevancy, to help the dollar stay relevant in the future.
Well, gentlemen, thank you so much for your time.